Before you seed a single acre this spring, there are 5 financial moves every farmer should make. And if you skip them, you can end up paying for it all the way into harvest. Because spring is when money starts moving fast. Inputs, fuel, fertilizers, repair, equipment, operating lines, crop plans, all of it starts stacking up before income starts coming in. And what's where farmers get trapped? Not because they don't work hard, not because they don't know farming, but because they make spring decisions without fully seeing the financial pressure those decisions create by fall. Welcome back, everybody. How are you guys doing? Welcome back to Farmers in Finance. Rico Manatza, and welcome to joining our show again across all channels. Everybody, thank you. We're live on YouTube, LinkedIn, and Facebook today. So if you want to see a replay later on, just go to any of the platforms. I can provide the links. Just leave me a comment and I will post it on here. This is episode 26 of Farmers in Finance. So every week we keep going. It's March 25th. So we're in full spring. And sure, what does that mean for all the farmers? Oh, it's hectic. I mean, I'm at my office right now, and outside of my windows, I can still see a little bit of snow last night came down on the hills, but it's those Okanagan Springs days, right? Like it gets cold, it gets warm, it gets cold, it gets warm until it settles and all the trees start budding and becoming an amazing place to be and to witness all the coming to life. Um, so last week we talked about farm successions. If you haven't watched the show, oh, I have to actually apologize for the show because when I went live, I pressed a weird button and it was making my voice sound.
Sounds like this. So, if you're rewatching,
I tried to fix it. Oh,
All the different voices. Yeah, there you go. Um, I I didn't hear it because I wasn't listening to my headphones, and so I was like, "Oh my god, I made the show with a chipmunk voice." So I don't know how many people watched it, and I apologize for that. It was a funny thing. But going back to farm sections, these are conversations. If you haven't watched the show, I'll just give you a little summary. These are conversations that families should have before the farm gets sold. And I am, I don't know if you have heard my story, but I was a former farmer and I love farming. I love everything that involves. And the best feeling is to produce your own food. But not just that is because I haven't experienced it yet, but I feel like another thing to really look forward to is leaving that legacy and leaving that land that you worked on with all the trees that you planted, everything growing and it's luscious and just full of life, and leaving it to your kids as like, or maybe leaving it to somebody that you really think that is going to take care of it and enjoy the land too. It's important to enjoy the lands and the fruits. The fruits, yes. I love fruits. I eat mainly fruits. So I wanted to, with that episode, I wanted to, kind of point out the hard talks. If you don't know about my history about me, I'm a former farmer, contractor, engineer, and as I went through all these, stages of life, I I wanted to find independence, and I found it through farming because farming gives you, the freedom to do what you want, but obviously it's still regulated by certain bodies and governments, and you can do what you want, but it's obviously regulated, but when you want to pass it on, you kind of want to pass that freedom so that when you put energy into something, you want it to go to fruit, right? You don't want to be trumped by different things. So when it comes to successions, as being a real estate agent now for over 3 years, um, sorry, excuse me. I got, sorry about that. I get sometimes dry throat. Um, so yeah, when it comes to success in the farm and everything, there's lots of I don't know, here in Canada, if you're listening to anywhere in the world, I'm sure there's taxes. And one of the big gurus that I watch is Robert Kiyosaki, and it's not. He says it's not about. Oh, this is not the quote of the day, but he says it's not about how much you make; it's how much you keep. And he doesn't really state it properly in there that it's about the tax man and how everybody, as soon as you start making money, everybody's in your pockets, right? And farms are the staple, I believe. They're the foundation of society. Without food, without farmers, you don't have society, right? It becomes like an anarchist, sort of like winner take all, law of the jungle, right? So, I mean, what I wanted to come out of the show was to have those conversations because it's important to start talking early and not when you are in panic or you're under stress or you feel like these are have to have conversations. And I know they're tough. I see it all the time with financial advising and even with real estate, when it comes to like probates or secessions or, oh, I don't want to talk like this. Well, it's we all reach the stage in life. I was watching a podcast the other day. We all reach the stage in life where you have to have that talk, especially with yourself. You can't be shy, like we find our immortality not to be true, and we realize that we are mortal. But that comes with a gift, or the realization of realizing that you're mortal. It gives you more purpose than if you were immortal, I would say. I don't know. I just see it that way. Maybe I'm trying to make an excuse. Anyways, um, before I dwell on, it's already 7 minutes in. Today's roadmap. Okay, so we're shifting from long-term legacy planning and succession into something much more seasonal because it's spring. I don't know. You've seen it. So this episode is about five financial moves every farmer should make this spring before seeding. I mean, I when I was farming, I used to get super excited about this time. It's like, you got seed exchanges. You just look at the seed catalogs, and it's like, oh wow, cool. What am I gonna grow? What am I gonna plant? Like without without really having, because this is when I was a young farmer, right? My first year, second year too, I still had that excitement. I mean, I have that excitement every year. It's just that I need something like my wife to ground me and to make me think, like uh, yeah, don't get so excited. We got to think about it as a business, right? Not as just like a hobby farm. Like I used to hobby farm when I was in Vancouver, and there was just experiments, and I had no expectations, but then my expectations were like blown out of the air because I was like, wow, this is great. I mean, look at the soil because you gotta like treat everything as a system, right? And then my engineering background brings back all that. It's just like I analyze everything. Every time you talk to me, I'm just like my brain is racing and trying to figure out like how can I make this more efficient? Ooh, this is a great idea. I got to do this more. And I always and also like I always try to gain more knowledge of what to do in the situations that I am, right? Um, so with farming at that time, I was not. I was just like going with the flow. I was just all gang ho. I had a little bit of knowledge in mechanics. So like there's fixing the tractor. You got have all your implements ready, your tillers, your scrapers, your uh, fertilizers, spreaders, manure spreaders, and all that. It's like, and it's another part of farming that nobody tells you, but you got to know it, right? Like you got to produce at the same level as other farmers. I thought, oh, I'm just going to take my hoe, I'm going to just till the soil, and then I look at my 7 acre farm. It's like, oh my God, this is going to take me the whole month. I need to have tools, right, to speed up and to stay competitive with everybody else. But that's where it comes to right now, and what we're going to talk about is the number one. Well, these are not per se in order. So, knowing your cash flow before the season starts. My God, isn't this one huge? Uh, like, you got to know. And then we'll go into details after, right? You got to review your operating line and what's the cost of debt. Obviously, to keep up with the Joneses, you have to get to debt. And we'll talk about that. What is good debt and what is bad debt? And also we talked about it before, but we'll always do this. And then another big one is stress testing your input decisions, because that's huge. Is the new tractor worth it this season? Am I expecting good profit margins? We'll talk about that too. Protecting against downside risks. That's a big one. Insurance comes to mind. Obviously, I'm a can't call myself financial advisor. But I'm a financial associate, and so I can help you, devise plans. And if you're seeing it here, no, yes, my website is ricardomanazza.com. There, you get to know a little bit of what I do in real estate and financial. Um, Services. And there, I can also help you free of charge set up a plan. And we could go over it every 6 months. We set up a plan. Like if you're in debt, or if you have assets or investments, or you just want to protect your family, or you want to protect your home, I can give you all that into one simple plan to follow. And every 6 months, I'll be your accountability coach. So that was just a plug. Go check it out, ricardomanazza.com. Pretty simple, easy. Just follow my first name and last name. Anyways, going back to number 4. Nope, number 4 was protecting against downside risks. Number 5, knowing your break even before you plant. If I knew this one when I started the seeding, um, I wouldn't have planted so many zucchinis. I love zucchinis, but it's just like they don't produce too much profit margin. Uh, just a little story. And when I first showed up at my first farmers market, I was so proud. I had planted seriously 40 plants of zucchini. And if anyone out there, and I'm sure hopefully some farmers are watching this, I'm sure you know how much a zucchini plant produces. So then I was like stuck with all these zucchinis because obviously everybody else planted zucchinis too. And whenever they came to the stand, oh, I got lots of those. Oh, look at those sizes. You're not picking them early enough, because obviously I always wanted to plant zucchinis early. So that I would get a nice crop, but then I would let them grow, right? Like I love big zucchinis. I love stuffing them. I love zucchini spaghettis. Anyways, that's just another plug for more zucchinis this season. But obviously when I came to the farmers market, it was a product that everybody had. I wasn't growing something unique, so I couldn't charge that much money. I was giving them almost away. They were like 50 cents for like 2 pounds of zucchinis, right? And then I had to take them to, because what am I going to do with this? So the first 2 years, I took them to the grocery stores, which luckily took them and said and put them in a box. I filled up like a huge giant box of to the fill, like those fruit totes. I just filled it full with zucchinis every week, and but I only got 30 cents per pound to me, and then the store was selling them for $1. So knowing what you plant before you plant your break even point, that's huge. It doesn't just come out for for like the prices, right? Like, it just know your margins, know everything. We'll talk about this. I don't want to move forward in the show. So let's take a look at our slides. Before you seed, 5 financial moves every farmer should make this spring: cash flow, debt, and risk. So spring, I just want to put this quote. I was playing it in my mind. The show. Um, Spring is decision making. For me, this is the new year. Not January 1st, not last year. This is the new year. This is where you make the decision. This is where you breaking point. The sun is halfway point, equinox. The nights are the same length as the day. So from now on, the days are getting longer. So what does that mean? More energy, more life. Everything comes to life, more and more. And there's going to be an abundance, right? So it's springtime. It's what I mean, even the word spring, what does that give you? It's like you recoiled it over the winter and now you spring into action. So the emotions, the energy, right? It's all about the spring. And the decisions you make now, especially as a farmer, will affect what you get all the way into winter. But I don't think this decision just for farmers. I mean, this spreads across all spectrums, even in financial services. It's whatever you do now, it's going to affect the future. Whatever, how many conversations you have, whoever you talk to in real estate, financial services, whatever, businesses, man, they just open up now. The smart ones took a break. They just don't want to deal with the winter. It's winter is relaxed time, right? Like, it's cock back to spring, and then pew, cock the energy. Like, learn, read. I love reading. So, and sure, let's get to the quote of the day. What Oh, I love this quote. What gets measured gets managed. This is from Peter Tucker. So how does this ties into spring? Because you gotta one of the decisions you gotta make is implement, and implement. Whatever you make decisions now you planned. I hope you did, because planning is propagates proper performance. The 4 Ps of Pat Pirelli, horse training. Anyways, proper preparation, perfect. Something like that. Oh man, I forgot it. Sorry about that. I'll get it back next week. Um, that quote matters because spring is when many farmers are making huge decisions quickly. I know, but not always measuring the financial side clearly enough. And that's what this show is about. Farmers are like, they have many, many skills, but they're not masters of any. So when it comes to finance, and this is, if it's not taught, it's hard to learn, especially in this season. And I found it that for myself, it was hard to learn because in this season, you gotta get going. You gotta get the field tilled. You gotta get it fertilized or manured, and you gotta get all the supplies. You gotta get everything ready. You gotta sign up for farmers. Uh, you gotta sign up for all your clients for the CSA boxes. You gotta get everything planned and ready, and what you promised. The website, YouTube channel. You gotta fix all the equipment, get it greased up, ready. Like all the things that you couldn't do in the wintertime, now you gotta get it started. How many people out there had problems starting their chainsaw after all winter, right? Or how many people had problems starting their tractors? Like, all these mechanical things, they need maintenance. Obviously, we're going to the electrical side of things, but even that, I mean, costs might rise. I wish there's going to be an electric tractor pretty soon, the Tesla tractor. Ooh, I'm going to talk to Elon, see if he's going to think about the Tesla tractor. I'm sure that's going to be a huge hit. Um, you can be a great operator, a hard worker, and a smart grower, and still create stress later. It doesn't matter. If the money side isn't measured in real time, you're not gonna have a proper outcome. And I am, I am guilty. I'm the first one to admit that I'm bad with budgeting. But once I started budgeting, everything becomes clear because it's like, why do you think every part of the societies that I've been into, they have a budget. They read it out to their members. Why? I couldn't understand why. But in the end, I see year over year, it's like, well, it's critical because then you know where everything is going. And if there is, like obviously you got to uh, put in the budget for risk and extra expenses because always, no matter what, those get filled up, right? And and it's a good time to start thinking. I'm going back to the show, or else I'm going to drag this on. It's when cash starts leaving before revenue comes back in, and happens with every business too. It's you're borrowing a lot of money for a future outcome, right? And because you have had the skills and the knowing and the less stress comes from knowing. So as a first farmer, first year was like, oh, okay, I'm gonna plant. There's excitement. You got your investments. You're good to go. You got your cover, and then you're like, oh wow, I didn't think it was gonna go this way. So now I have to, the second season now is like, well, now I got to make better decision, right? So it is huge. Spring is not just planting, it's decision making. So you don't want your cash flow to escape too fast, right? There's lots of decisions to be made now in everything, business, real estate, and even in real estate. Like if I can bring you back, why everybody starts looking at homes now? Because it's springtime. It's like, oh, I want to renew my life. I want a new home. I want a new house on the lake or cottage, or I want to get away from the busy street because I think, going somewhere else instead of staying home, it's going to create less stress. Hmm, I doubt it. But, anyways, yes. So, spring is just everybody starts spending, and that is great. Do spending. I'm not saying don't spend. Spend is good. We are in an economy that needs spending. The dollar needs to move around. In another show, just something popped in my mind from this book. It's not a book. It's actually a set of tapes that was made in the 80s, but it's the money consciousness. And there was this thing about, there was this example that the presenter did, and he went and talked about how money flows. And he had this. I'm just going to tell you a little bit because it's pretty important, and it has to do with spending. And he said that he had a dollar and he was ready to buy something to the group, right? And then everybody was just like, "Oh, what do you mean?" And he's like, "You come to a money seminar and you don't know what you can sell to me." And then oh, then they all like realized, and then they got up and there was like, "I got a pen to sell you, for a dollar." This was in the 80s, so a dollar bought you something more than it does now. But so I got a dollar. Oh, I got a piece of paper. So everybody was saying something physical, right? They were trading something physical, and then he said, "Okay, I'll buy your pen." And then he passes on the pen to the next person. And then he says, "You don't have to just sell a product. You can sell a service. You can do something for somebody." And then people started realizing, "Oh, okay, it's a service. Oh, I can be your secretary for 2 hours, or I can give you a massage or something like that." And then that other person passed it on and so forth, right? And it passed on like 10 times over, right? This $1. And then the presenter goes, for $1, I will tell you what the scope of this presentation and this exercise is, right? So the last person that said, "Oh yeah, okay, I want to find out." So he pays the dollar, and then he says, "Look at me now. I have a pen and I have my dollar back." And then he pauses. And that's what the haha moment that it's like, but not just that, he said. This dollar just went around 10 times and created motion and energy. And it's the same dollar, right? So the more dollars are in circulation, the more energy gets output, right? So what happens is when there's these energy influxes, and they tell you about in financial services, right? Like when people start saving, that's the worst time because things get put back. And that's why we are having, indecisions right now, because there is war and there is like so much information and inputs that are like, whoa, I don't want to go anywhere. It's scary. Like the last 2 weeks ago, my mom was trapped in Mexico in that Puerto Vallarta incident that never happens, but all of a sudden it happens. So now people don't want to go to Mexico. Now people don't want to go to the States. The States are evil because there is this guy in office. So it's like the States haven't changed. They're the same place. uh, well, that's another show. Anyways, you know what I mean? Like we kind of tend to stop doing, and then all that energy gets stopped, and then we talk about like restaurant businesses are failing and blah blah blah. Well, because people get paralyzed, like there's so much decisions, and I don't say to go into that or anything like that, but I'm just saying go out there, enjoy your life, like don't sit at home because you're scared of doing anything, right? Like do something, and just like the exercise, you don't have to pay for physical things. You can just go for a walk. But still going for a walk, looking in nature, you're stress releasing, and then you come home and you feel good, and you might sit down and do something nice or clean up the yard or clean up the mess, like, and your life gets better. And it doesn't have to do with cash flow. It's just energy, right? So spring is about energy. So let's go back to the move number one. Move number one. I can't see my slides. They're too small. So number one. Okay. See, here are the 5 moves that I pre-announced, right? Know your cash flow, review operating line plus cost of debt, and then stress test, input decision, protect the downside risk, know your break even before you plan. Huge for anything, businesses or anything like that, right? Like we're not all experts, but it's important. And if you're listening to this on Spotify or Apple Podcasts. All my slides will be on YouTube or LinkedIn or even on my website, farmersinfinance.com. And then you can watch there the show once you get home. But I'm trying to, make everything explanatory so that you don't have to. But leave the comments down below, or if you're watching this in the future, what I could do better. I'm always up for improvement. Know your cash flow before the season starts. That means what money is leaving in the next 30, 60, and 90 days. Oh, let me adjust the slide. Perfect. What bills are locked in? Okay, so it's important to know, and that's again done by budgeting, and that's what I do whenever I take on a new client. We got to create the budget. You got to know where everything is going. There's so many people that are just relying on credit cards and it's killing them. But what they do, they emotionally got so convinced. Like this, there's so many thoughts going through my head. The economy is changing. This is a different economy than it was, and it's changing and this season. It's going to be huge differences, right? Like you got to keep your costs low because there's so much uncertainty, especially when it comes to like real estate, that a lot of people don't know what's going to happen, and you want to know what bills you're gonna have, right? Like your electricity, power. I've just heard the other day that gas might go up to $5 a ton, whatever measurements they have. So a lot of things are going to double in the near future, but obviously they're not going to double suddenly, but slowly and gradually. Is that I use stress testing that? So that's huge. Knowing what bills you have, and in farming would be, your diesel fuel. Has anybody looked at the pump prices? Diesel. Has anybody really looked at the pump prices? Because diesel, on the background engineering here side again speaking, diesel is the cheapest to make, but right now it's crossed over the threshold and it's more expensive than gas. Do you know why? Because most transportation, most of farming is done on diesel. So the most margins are made with diesel. And that's why the gas company do it, so that they keep the people happy that have gas. Nothing to do with the economy, nothing to do with anything else. And obviously, a rich country of fuel like Canada, seeing the prices at $2 uh, for a liter of diesel, it seems insane. I just don't get it. But obviously, oh, the war is affecting it. Yeah, okay. Manipulation times. What expenses are still assumptions? Um, yes, you got to know what expenses you're going to see in the future. That just not just about farming; it's about everything, right? Like any expense that you have, you got to have it down and written down and visualize it. When pressure points are going to hit. Okay, so where is the most uh, time input that you have to put, right? Like for example, it's like when you're planting the seeds, you got to wait 2 weeks for most of them, and then they sprout, right? And then you have to transplant them. Huge input. Here in the Okanagan, we can't plant them until like May 25th or so. Well, it depends on the snowpack and how you see it, anyways. But May 25th is the proper date because you got to go with the light, right? You got to go with the sun, and the sun is not going to wait for you. It never does. So you gotta spend nights, transplanting, and it's probably not a bad thing. Plants are cooler, and they can sustain the stress a little bit better at nighttime instead of the day because when you're transplanting, just a little tip for you gardeners out there, when you're transplanting, and then you stick them back in the sun, ouch, and possibly you're transplanting in a window or you're transplanting in the greenhouse like what we used to do. You don't want to shock them and create too many shocks, or else the plant, they're super resilient, especially if you use good seeds. Nonetheless, it works, but if you want the best outcomes, always plant in the early mornings or maybe at night just before the sun comes up. Anyways, just a special tip for you guys out there wanting to grow your own garden, because you don't know your timing when you're not really planning. You're hoping, right? You're hoping that everything works out. Cash flow problems don't start when you run out of money. They start when you stop measuring timing, right? It's all about timing. It's all about what situation. So ask yourself this: if I looked at the next 60 days right now, do I actually know where the biggest pressures is coming from? 60 days, that's 2 months. That's May. Where are we looking at? Farmers market is starting in 1st of May, or sometimes here in Penticton at 1st of April. So we're almost there, right? Seed exchange, blah blah blah, and what so on. So a lot of farms too. I want to talk about this cash flow thing, right? A lot of farms are profitable on paper over the full year, but still feel tight in spring because the timing is brutal. You got so much stuff. You got seeds, you got fertilizer, you got fuel, you got labor to take into account. You got high level of labor, like I was talking about. There's the transplanting, there's the road, the tilling, the cover rows, the repairs to the equipment, everything. Everything piles up in the spring. The digging, the trenches, the water and stuff. Just making a funny joke because that's what I'm doing right now. I'm setting up a sprinkler system into our small hobby farm. You never stop planting, so there's equipment pressures. Like, do I want to change the tractor or not? Well, that would be nice if it's enclosed. Those early cool mornings would be a lot better if I had heat in my tractor. Or like last night was really raining. Oh, if I had rain-proof cab, but does that affect your cost there? So maybe family expenses too, but don't put the family expenses into your business. Big no no. Always keep everything separated, right? So that you understand how the business cash flow is working, and then how's the farm, I mean, family farm cash flow is going. Those two are important to keep separated, especially when it comes to taxes and deductions and everything else like that. So, a good question to ask yourself: are you separating household pressure from cash flow clearly enough? That's what I'm saying. Once you know your cash flow, the next question becomes: what is your borrowing actually costing you? Huge one, right? When we had Gaurav here on the show, yeah, sorry, like this show is supposed to have Gaurav on here, but he's been in with the time change and everything like that. He's been busy with the family over in India, so he's not able to join. But hopefully, I can get him back on the show coming up soon because he's a wealth of information, even when it comes to budgeting and businesses. He's got multiple businesses, and that's why he's over there trying to restore them and get them going again. Um, so let's go back to move number 2. Okay, so review your operating line, cost of debt. Review your operating line and the real cost of debt, right? That is not automatically bad per se, like I was saying. That's not the point. The point is whether you understand it clearly and what it does and how to use it, right? A lot of people, there's a few different types of personality. There's obviously, I'm called by my wife the dreamer, where I put the horses way ahead of the carriage and sometimes leave the carriage behind because of the decisions that I make. But a lot of farmers use their operating line every year, but never really pause to ask, right? Like what questions should we ask ourselves? And I wish I knew that when I was first starting. But obviously, if you don't have like a guide or a guru when you first start something, I guess you just have to improvise, right? What is this line costing me now, right? Like a tractor or a packaging equipment, or what I found was the cooler. The cooler was big for me. Once we had a cooler, we could relax a little bit more. We could keep the fruits and the vegetable from spoiling better, especially in the summer heat. And we didn't have to pick everything in the evening or in the morning, early morning. So we had a little bit of a spread of time. Anyways, so for example, let's go with the cooler example. Is it worth it getting that uh, put into our debt, because obviously I had to borrow for having the cooler. And then what's the rate that I'm getting charged on it? Is that putting enough profits into my pocket so that I can justify the spending? And then how much stress on my stress is old debt versus the season spending, right? Like, did we accumulate that stress, right? And carry it over? Am I borrowing for production or plugging past leaks? That's a huge one, right? Like, you got to look forward into, is this going to produce me something, or because last season I had a crop failure, or I am I'm reacting to what I didn't plan for last season. Like maybe I didn't change the transmission oil in the tractor, and now the transmission blew. So now I have to borrow for repairing something that I should have done that was in the budget, but I just didn't plug in the. And it's not just about time. Sorry, yeah, just give it up there. It's not just about money, it's about time too, right? Like you gotta plan your time as well, not just the money line. Obviously, we're in finance, farmers in finance, and we're talking about money, but money is time too, right? Like you can hire a mechanic if you can't do it yourself, right? And try to spread that and try to weigh out the 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 possibilities, right? So the key the key point I want to make here is that debt is not automatically bad, but unmeasured debt gets pretty expensive. So if you don't track it, if you don't measure it, and that goes back to the quote of the day, it can just blow up. So as probably I would say 80%, like they've done a study, 80% of Canadians now are relying on credit card debt. Maybe it's bigger than that, but I'm just playing it safe because I'm being recorded. So it's like, oh, wow, you said 80%. Well, at least 80% of people in Canada here are in debt. And credit card debt is the number one cause of a lot of problems. And it can snowball, right, with rates of 20%, 19%. Obviously, what I teach my clients too is to start getting into different credit cards to lower the interest rate. Like, for example, there's credit cards out there that offer 8.99%, which is above a line of credit. But if you don't have the proper credit to get a line of credit, then this is probably your best solution. So look into credit cards that offer lower rates, and then transfer your balance over and then pay out that debt. That doesn't mean that you can just like, oh, okay, now I can go spend some more. No, 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 no. Pay out that debt. That's the number one debt that you got to pay out, right? When the harvest is good. If it's not in the springtime, make sure that you're going to pay that debt and make sure you calculate, like your cash flow and understand what it's going to take to pay that debt, right? Okay. So the spring debt, I call it the trap, right? Because we're so excited, we're making all these decisions. That's fine. I'll think about it later, right? So spring borrowing feels normal. Like, and I've had this experiences. Like a lot of farmers are relying on line of credits, and banks give farmers line of credits pretty easily. But when it comes to uh, overloading line of credit and not being able to pay it off or have a plan to pay it off too. Sometimes, oh, I'll just pay it off. Oh, this came up, and then all of a sudden you end up at harvest time with still the same debt you started off plus interest. So, but what becomes dangerous is when normal turns into automatic, right? Like you don't want to get caught in those patterns of like leaving it to later or creating those habits, right? So if every year starts with the same scramble, the same line usage, the same pressure, then you may not just have a seasonal pattern. You may have a structure problem, right? Like you have problem. These are changing times, right? Like, and like I said before, you need to change, right? Like we've been trained or taught or marketed that credit card debt is past. Enjoy your life. You only live once. Buy what you want now. Enjoy it. It's like we're treated like kids, and then all of a sudden these gimmicks are working. They're working. Marketing is a science, right? Like there's so many people out there that leverage the psychology of people, and I'm just reading a book right now, and it's the influence, persuasive influence, and talks about all the ways that people um, are influenced and how they do things and what triggers them. And the last one that I was just this chapter that I'm reading, and the insert was in comedies how they put the laughter there. Nobody likes it. Nobody likes the laughter except the business people that make these shows, the producers, because when they look at the stats and they overlap, non-laughed shows with laughter shows, the stats are insanely towards the laughter shows, even if the jokes are bad. But if you have in the background laughter, people just get hooked, even if you know about it. You just get dragged into not laughing, but even like just having uh, uh, a positive feeling, right? Laughter, hearing laughter from somebody else is contagious, just the same as hearing problems and nagging and all that stuff. So spring is where optimist and debt shake hands. Welcome. Now, once you know your cash flow and debt costs, the next thing to challenge is your spending assumptions. Okay. So that brings us to move number 3. Let me change the slide here. Stress test your input decisions. Okay. I hope this is clear because whenever you go for an application for a mortgage, they stress test you. You know that they stress test you? I don't know if people know or if you haven't applied for a mortgage. They stress test you 2% more the actual rate. So right now, let's say we have 5% mortgage rates. They're going to see if you can make the payments for 7%. Um, and that can add, like 200 to $300, depending on what your income is, what you're buying, like apartments or house. But still, that stress test is like, well, I'm not going through it. But why do they do it? It's because they want to know that you would be able to pay if there is any issues, if there is any problems. How does that relate to farms? Well, it's about making the proper decisions, like are these seeds better than the other seeds? Is it worth the increased cost? Because always I used to have a seed company. Well, me and my wife used to have a seed company, and we just got only the best seeds. And let me tell you, they were expensive. Whenever we looked at the catalog, we're like, why is such a difference? Because the seed is kind of like the foundation, it's the initial point. In farming, you got to have good seeds and good soils, the two, the mother and the female, right? If you don't have those, you're not guaranteed a good crop. I mean, you can have good seeds and bad soils, but it still won't produce very well. You can have good soils and bad seeds, it'll still do better than the other one. But then if you have good seeds and good soil, your profit margins will skyrocket, right? So seed choice, right? Stress test this, right? Like you gotta um I put in my notes because I use AI, but fertilizer. I'm not a big fan of fertilizers because it doesn't create sustainability or regeneration of the soil. It just it actually becomes a dependence on what you put on your soil. So if you're a gardener out there, I definitely recommending using other techniques like maybe permaculture or layer cropping or composting, because even if composting is still an input, but it still has a way to regenerate the soil, create life. There is life beneath and above, right? And so we gotta assume the two worlds. Obviously, we don't crop out of the bottom of what's in the soil. We crop what's up in the top, and that's the fruits. But still, the two are in symbiosis. And so that's another thing why I don't like fertilizers, because they tend to burn the life underneath it, and so they make the soil dependable on the life above it, right? So and that in the long run, if you don't make it sustainable, in the long run, the fertilizer cost will always go up, right? But if you have a regeneration, your input costs will come down, right? So a little bit of a thing about that, and then fuel assumptions, right? Like how much is, especially now, right? Like I talked about it before, $2 per diesel, right? And that's huge. You gotta stress test that. What if my fuel doubles? Maybe not doubles, but and labor costs, right? Like Can I find labor? I mean, over here, the farms are relying on the Mexican workers or other people that come from other countries because they're cheaper to pay, right? But can you factor that in? I think you should stress test for normal labor, right? Get the community involved, right? Get the people from here and not have that dollar cross the border and go into another economy. Keep the economy here. Keep that energy going here. And then repairs, right? What are important repairs? What's a must do's, right? Equipment purchases. So, I mean, that's a lot of stuff to stress test, but it's important to just have that in mind, that mindset that you have to stress test, and that is critical, right? What am I assuming the spends will produce, right? This is huge. What if prices soften? Another one. My profit margins will go down, or do I increase prices? But if I increase prices, then my profits will go down, right? So that's these are all things to be asking. What if yield misses, right? Like, oh gosh, we had a little bit of a powder mold. Oof, that caused the zucchini plant to die, or the squashes, and then they all catch on, right? What if weather turns? With all the people, with all the manipulation out there, the geoengineering and everything like that, that's a huge one, right? Can we be reliant on the weather? Can we mitigate it? Maybe invest in a greenhouse? Who knows? But you got to stress test that, right? Okay, so let's move on because we're almost at the end of the show now. Like always, my slides are going to go super fast. Okay, so um, activity move three continued activity versus profitability. One of the traps in springs that is that spending feels productive, right? Actions feels good. Like you're moving, you're keeping going, and you got these decisions and like with experience, it comes to the confidence that what you're doing is the proper thing because you don't know the crops, but if you have done it before, you feel like, okay, yeah, I can do this season. But then other things come up about, right? Like, oh, the aphids or the bugs. But a farm can look busy and still be leaking money, right? Like if you don't measure again, right? Like you could still be leaking money. um so is if this purchase doesn't create better margin, why am I making it? That's the number one question you should make just for this slide. I'm going to keep it short, but and it goes back to the other topics that we were talking about. But make sure that whenever you make a purchase and you go into debt, is that it creates a better profit margin, right? It increases your value and your time, not just the value, but your time. If that increases your time, then go ahead and make it, right? And then obviously stress that. After that, the next question is not just about the upside, it's about what happens if the season doesn't go your way, right? Like, are you covered? And so that brings us into move number 4. Okay, let me change the slide here. Oh, how did I go so fast? Huh, I didn't change the slides properly. Anyways, why didn't anybody say out there, hey, that's the wrong slide? Anyways, move 4, protect against downside risk. Okay, protect, protect, protect. Protect against downside risk. What does that mean? Spring is the right time to think about what could go wrong before emotions are high, right? Like, again, that ties back into last week's talk. People don't want to talk about this, but because it's like, oh, no, I want to keep a positive mindset. And I'm like that too. Don't get me wrong. I'm like that. I don't want to talk about it. But whenever I go into seminars about insurance, I'm like, oh my God, I need to talk about this. Like people don't talk about this enough. you know, like in the past shows, I don't know if that was episode 23 or 24. It's like, who's going to take over if you can't work? What if you get injured at work? Yes, there is protections here in BC, and thank you for that. But is that enough? What if you get sick? And I don't, yeah, I don't like scaring people into something because it doesn't, I don't feel like it makes the proper emotional decisions. It's like, oh, I'm being coached into doing it. But it's just like, make the proper decisions, right? Oh, 5 minutes, and then we're done. That means thinking about crop insurance. Number one, like if you don't want to lose your farm, one season, like, most farmers are one season away to going broke, right? So if you lose that crop, whatever it is, ale, last year, no, 3 years ago, we had that freeze when everything was warming up, and it killed like 40% of the young, newly planted grapes. That took a huge hit, and now we're seeing foreclosure for winers. Not just that, but wine consumption went down. Anyways, that's a side note. Agri stability or related protections. In a previous episode, I think it's 23 or 24, we talked about this, right? Know the government programs. They offer, like things for farmers, and they're all free. Just apply for them and make sure you're protected in that sense too. If you can't afford it, talk to me, Rico at farmersinfinance.com. Just email me, or you can email me at ricardo@ricardomanazza.com, or any other. That's another plug for you guys out there. Anyways, emergency reserves. When we teach the financial house, this is a huge one, and it doesn't have to pertain to business. It's about everything. It's just to have an emergency funds, have emergency reserves, because this is huge. When the harvest is good, put something aside, right? 20%, 30%, whatever you can, but put something aside. Even if it's $5, put it aside. Put it in a book. Um, you know, are you insured for weather events? Do you properly mitigate? When I was a farmer in Oliver, there used to be these times where we had like tornadoes coming down, right? And the shelters would get blown up in the air, and I was like, nobody taught me about this. And then next year, obviously, I protected for those. I invested in some pegs for the horse shelter that usually got flipped over. The greenhouse plastic, I had to get some thicker stuff, right? So you got to plan for this. You got to insure it, right? Equipment breakdowns. It's mechanical. It's always failing, right? Injury or key person risks. That's huge. What happens if, a laborer gets injured in the midst of planting? Oh my God. Are you protected for that, right? Like, what is the downside in the season, right? What risk is insurable, right? What can you insure? Too, sometimes you can't insure things, but there's a lot of things that you can insure, and use it, right? Like, it's not that expensive. People think like, oh, that's too expensive. Oh, it's gonna break the bank. Well, what breaks the bank is not having it, right? So let's go to move number 5, and we have 2 minutes. Know your break even before you plant, right? Like, what's my profit? What's my margin? What can I market it for, right? What you need to produce, right? Like, I was doing this last night for an investment property that we're looking at with my wife, and we're just analyzing, all the costs and everything like that. So just do the same. I can set it up for you. You know, I can set it up for each crop. How many plants you're gonna produce, how much, with your knowledge of what you plant, like, how much is this fruit tree producing, right? How much are you going to sell it for by the pound? What's the cost now? Well, okay, I'm making this much. So is this going to break me even if I invest into the tractor or the mower or whatever you need to, right? Like, you gotta know your break even point before you plant, because if you plant and then you just hope for the best, oh my God, that's real, like, failure. And trust me, comes from experience, i.e., the story about the zucchinis. Anyways, I hope. Oh, man, see, I didn't change my slide. Do you know your break even clearly enough to make calm decision this spring? Don't make rushed decisions or spontaneous or anything that involves emotions, because let me tell you, being in real estate, a lot of people make decisions by emotions, and sometimes they feel like cornered, and sometimes, like, it's they don't feel like they made the right decision, because they were obfuscated by their emotions. But anyways, okay, let's bring it home. Before you seed, here are the 5 financial moves. Know your cash flow. That's what we talked about. Review your debt costs. Stress test your inputs. Protect downside risk with insurance or any other ways. Know your break even. So before you seed, measure the money, test the plan, and protect the downside. In this, if this episode helped you in whatever way, send it to a farmer who's making spring decisions right now, please, because these conversations are much easier in March than they are in September. Because in September you might have to sell something, and if you want help thinking about the financial side of your season, cash flow protection, structure, or long-term planning, reach out. Reach out. Give me a call. My number. Oh, I didn't put my number up. Anyways, my number is 236-457-4230. Please, robocalls, stop calling. Okay, I got you. Press the number that it's asking you, and you'll make it through. Reach out through farmersinfinance.com. Send me an email. Go to the website. Contact me. I am everywhere on the web right now. So I want to thank you for watching this. Thank you. We just went over time a little bit, but I hope this helps. I hope this helps in business. I hope you can come and watch next show. I'm thinking of doing something about taxes because I love taxes. Oh yeah, I love taxes. Love talking about it. I just finished my GST. Yeah, I love taxes. Anyways, let's get on to the show. Thank you for watching again. If you're watching this, please leave a thumbs up. Even if you didn't like it, I don't know if there is thumbs down, but don't put it there. Stay positive. Okay. I hope to see you next time. Thanks for watching. And this is Rico, Farmers in Finance. See you next time. Bye.